Could markets rally all the way into summer? Well, that's a possibility. We'll talk about that today, coming up on 3 Minutes on Markets and Money. As we move into the month of June, which is the last month of the second quarter, there's a lot of suggestion here that we may start to see a much stronger rally out of stocks, particularly in the summer. June has not had a negative month since 2015, which kind of bodes well for the month anyway. July tends to be also one of the stronger months of the summer period. Now, once we get into August and September, things get a lot more challenging. But to see a couple of strong months here, obviously, really would not be a big surprise because markets have been under so much pressure this year already. And the way that markets work typically is they tend to do the opposite of what everyone expects. Lately, we've had 8,200 articles written on the coming recession, the bear market, lots of negative sentiment. Consumer sentiment about stocks is extremely negative. In fact, it's at levels that have historically been near market bottoms in a non-recessionary period. So again, with everybody so negative on the markets, markets tend to do kind of the opposite. And that's what we would expect to have happen here, is that as markets turn up on these buy signals from oversold levels, markets might chop around here a little bit, but I think the bias could be higher here, at least for the next 3, 4, 5 weeks, as investors start to kind of reposition their thought process. Again, when everybody's so bearish, as the market starts to rally, what we want to see here is people becoming more bullish. When the financial media starts saying things like, the bear market bottom is in, clearly the bull market is back, and we start seeing articles written about that, that's going to be the opportunity for the market to actually have a bear market. We need people to come off of that bearish sentiment, get bullish. That's what bear markets do. Bear markets have these nice bear market rallies that tend to suck investors back in and then kind of opens a trap door beneath them. So once we get this rally back here to 4,300, maybe even 4,400 on the S&P, we should have a lot of bullish sentiment back in the markets. A lot of this bearish sentiment should be behind us. Then that's going to set up the possibility for that next leg of the bear market as the Fed continues to tighten their balance sheet, hike interest rates, start to see slower economic growth. Then that's all going to weigh on the markets later this year and start to potentially push prices lower as earnings estimates decline and as we start to get more concern about profitability of these companies as we move into the latter part of this year, first part of 2023. So watch this rally here. Again, don't get sucked into the commentary that the bull market is back. Continue to use this rally opportunistically. Rebalance risk in portfolios. Look for opportunities in cash flow companies that have positive free cash flow, better valuation, stronger earnings growth, and can grow earnings in a more disinflationary environment. We're already starting to see a lot of the indicators coming in showing that disinflation is going to be an issue later this year. So be careful about being too long energy stocks. Maybe look at taking some profits out of energy. Start to look at more of the value side of the equation, companies that can generate earnings growth in a weaker environment. But again, having a little bit higher level of cash also would not be a bad idea. But do that using this rally to rebalance that risk. You don't have to do it all today, but as this market continues to rally over the next month or so, incrementally start doing that work. That's 3 Minutes on Markets and Money. We'll see you tomorrow.